All right, good afternoon, everyone. This is Joe Bacella here at Chaikin Analytics, and I'd like to welcome you to our presentation of Trade Options Like an Expert. Presenting today is Marc Chaikin, founder and CEO of Chaikin Analytics, along with Josh Mindlin, Director of Client Success here at Chaikin Analytics. Now, as a reminder, this webinar is being recorded, and a copy will be sent to everyone who has registered. Please submit your questions throughout the webinar using the Zoom Q&A window, which you can access in the upper left-hand corner of your screen. Now, Marc and Josh are here to tell us about Marc's latest contribution to the financial industry, the Chaikin Power Gauge Rating, a proven 20-factor model that uniquely combines fundamentals and technicals. To get us started today, here's Marc Chaikin.
Thank you, Joe, and welcome everybody. When Josh Mindlin joined us about a year ago, he came with 5 years experience teaching options trading based on his work with professional options traders on the floors of the various options exchanges. And Josh has done one-on-one sessions with our new clients, as well as having presented his first options webinar about 6 weeks ago, which was extremely well received. So based on your feedback, we're bringing Josh back. I'll be interjecting along the way, but Josh is going to share with you his experience teaching options trading and how Chaikin Analytics can help you improve your options trading results. So with that, it's my great pleasure to introduce Josh Mindlin. Take it away, Josh.
Thank you, Marc. And it's a pleasure to be with everybody here today. I did spend time, as Marc said, learning how to trade options from professionals. I learned how to trade options from experts. Today's subject is how to trade options like an expert, and I know something about that. A little more bit on me. I did spend a good amount of time at a place called Online Trading Academy, where I learned how to trade options, among other things, from professional options traders, from market makers, floor traders, institutional traders. Some guys came off the floor in Chicago from the Chicago Board of Options Exchange. I learned from guys on the floor there. You got some funny stories from those guys. Maybe one day if we're on a one-on-one call, I can tell you about the Goldman Sachs trader who used to annoy my buddy Eric, who was a floor trader in Chicago pits. So I know what it's like to trade like an expert because I learned from them. I'm blessed to be able to have that experience, and I'm blessed to be able to share that with you today and with all of our clients here at Chaikin Analytics. Before I joined Chaikin Analytics, Marc gave me access to the platform that he's created. He wanted me to understand where I was going and what the tools were. And I got to tell you, it took me no more than a blink of an eye to recognize the value in the platform. When it comes to what it takes to trade options, or anything for that matter, options, stocks, currencies, futures, whatever it is you're trading, having a directional edge is paramount. In fact, I heard my colleague Dan say this today, so I'm gonna credit him with that, and he's absolutely right. Having an edge in the direction of stock and going is paramount to any equity or options trade. And so we're going to talk about that today. And I saw that immediately with the platform when I got access to it, and honored to be able to join the team that Marc invited me in. And Marc's an options expert in his own right, so I get to go walk over to his office, open door, and ask him about my options questions when I have them. So now, these are all the places that we've been quoted in. Marc's done appearances on these. It's no shock to me. This was pretty much what I expected when I came here, is to see these sort of names on here. NASDAQ, MarketWatch, Malden, love the Malden guys, Forbes, and that because Marc has an expertise in the market, and what he's done is he's created something that is accessible to the individual investor, that leverages his experience over time in the market, and it's powerful. And so it doesn't shock me that we have those sort of names. So let's dive right in. We're going to talk about how to get ready for 2017. We're going to talk about what you need in order to be successful in 2017. We'll talk about a little bit about hedging for a January decline, should there be one. A lot of stocks have run up, so we'll talk a little bit about how to do that. We're going to talk about understanding how to get your risk reward down, understanding your probability of success, all the things that go into being a really good trader, options trader. We're going to talk about them today, and a plan. I don't know how many out there have a plan, a written down plan, or even if it's not written down, just a set of rules that you live by in trading and investing. I think having a plan is very important. I think it makes for unemotional decisions. One of the things that the options experts do is they have a set way that they go about being in the market, right? They have a plan. They know exactly what they're going to do next, given whatever the circumstances they are faced with. And it makes for unemotional decision making, which greatly increases your odds in the market, just having a plan. So we do that with people all the time, myself, my colleague Joe, Michelle, the entire client success team here. We work with people all the time on helping them use Chaikin in a way that fits with what they're trying to achieve. And it's a brilliant platform that allows you to use it in different ways, long-term, short-term options, and everything in between. It's a fabulous tool. And so let's talk about it a little bit more in a bit. First, 2017. This is the most likely scenario that we're looking at. I don't want to touch on the market as a whole in general. I want to get more into some of the specifics, but I would be remiss if I didn't at least mention what we're looking at for the next year or so. And we were in a situation, as you can see in the top left, with falling rates and rising earnings. It led to a great bull run. Then we had falling rates, but also falling earnings as we entered into 2015, a little bit in 2016. Looks like the bottoms come out of the earnings and they're starting to rise again. And so heading into 2017, we have what we expect to be higher rates and higher earnings. And that's the scenario that we're looking at for 2017. So we're looking at a mildly bullish scenario here. All right, so that's where we think the market's going. But the real question is, how do we engage the market? How do we get there? And how do we do it with the best odds of success and the best risk reward? So we're going to talk about that. Now, how do we go about that? Well, at Chaikin, we use the power gauge rating and the relative strength to find good bulls and bears. We call that the dynamic duo here. It's a very powerful way of getting your directionality right. And you're going to hear me say this a lot, so just take it to heart. Having a directional edge in the market is critical to any strategy. I'm going to say it a lot. You might even get bored of me saying it, but it's so important. And using the power gauge and the relative strength gives you that edge. Money flow, Chaikin money flow. Marc developed this decades ago. It's still used. I have two professional platforms with accounts, one at, two professional platforms, both of them come standard with Chaikin money flow. There's a reason for that. It's an industry standard. And we're going to talk about how you can use that to help predict future price movement. Now, timing. We have signals for entries and exits. One of the biggest things I hear from subscribers is they struggle with when to get in and when to get out. We can help you with that. I got to tell you, most people, and if you talk to me on the phone, you've probably heard this before, but I think that most investors are like kids at the pool in the summer. They dive right in, they're happy to get in, they splash around, they play, they have fun. As soon as it's time to get out, though, they never want to get out, they never want to leave. And I find investors is the same way. They're having so much fun in a bull market, they never want to get out, even when it's too late, and they start giving profits back, right? And kids turn into prunes in the water for too long. You got to know when to get out, so we can help you with that. Also, avoiding landmines. One of the biggest things that professional investors and traders do is they manage their risk. Managing your risk is so critical. Understanding your risk and understanding how to avoid big losses can really help you in your portfolio. It takes a enormous gain to overcome a big loss. But if you're able to keep losses small, you don't really need huge once-in-a-lifetime gains to overcome them. I know you lose 50% on a position, you need a 100% gain just to make that back to even. You should never be stuck in that position, and Chaikin can help you so you don't have to be ever in that position again. We can help you with understanding the directional edge and the timing that you need to avoid those landmines. Listen, just stay away from bearishly rated stocks could help you a lot with that, and we'll show you that. And then we're going to talk about options, of course. This is about options. Ultimately, you're here because you want to hear more about options, and I will talk to you about that. But I do want to talk first about the tools that you have at Chaikin, because understanding the direction a stock is going is key to understanding the best option strategy in front of you. Experienced options traders know this. I don't think there's a single experienced option trader out there who goes and looks at an options chain without at least looking at the stock chart. That's because understanding the stock and where the stock is likely to go and when the best entry and exit points are key to really being successful in the options market. Now, we have a great tool. It's called Options Play. I use it. It's fabulous. We'll talk about it today. I'll show you some examples that I got from it this week. I pulled them this week, so we'll look at some examples from recently. And for experienced options traders, it saves a lot of time. There's a lot of stuff that I used to do in terms of understanding my probability of success and having to go through the Options Play does it all for me. It does a lot of math for me at touch of a finger, real quick, couple clicks, done. I have all the answers I need, what my risk is, what my potential reward is, what my probability of profit is. It just hands it to me real quick. It saves me so much time. And I got to tell you, time is one of the most important commodities you have, if not the most important commodity you have. For new options traders, it's great because, options, there's a lot you can do with options. I always say options give you options. That's copywritten, by the way. Josh Mindlin 2010 is when I came up with that. Options give you options. What do I mean by that? There's a lot of choices, right? If you are bullish, you could sell a put, do a bullish put spread. You could do a bullish call spread. You could just buy a call outright. There are like 4 different strategies if you think a stock is going up. So now, which one is the best? Easy way to do that with Chaikin. We have it in Options Play. It gives you a rating. We'll get to that, right? So choosing the right strategy and understanding the risk reward and the probabilities, that is trading options like an expert, and we can help you with that. I'll show you how we go about that today. For some of you more experienced options traders, you might look at maybe an example today and say, maybe that's not the one I would choose. That's fine. There's a modify feature in this thing. I'll show it to you. It's amazing. You can quickly go through all kinds of expirations and strikes and get a score updated, risk reward updated real quick. It can help you hone in on exactly what you're trying to do with your style. So finally, we're going to talk about generating income. Who doesn't like to generate income, right? Monthly income. Who wants that? I know I do. More of it, right? So you can generate monthly income, but you have cash sitting on the sidelines. You're not going to get a lot for that cash if it's sitting in a money market or a CD where it's locked up for 90 days and you get pittance. You get pocket lint for the amount of interest you can earn at a bank these days. There's a better way to do it. You can generate income off your cash by using the options market. And for those of you that have stock holdings that you want to hold on to long term, we can talk about how you can rent out your stocks by selling covered calls. It's a great strategy. I call it, it's like a lease to buy sort of strategy. And you can rent out your stocks just like you would buy a rental property and rent it out to people and just take in income every month. It's fabulous. So we'll talk about that as well today. All right. Now, information overload. I know a lot of guys that get caught up on all this information coming in. You can look at an options chain. There's so much data going through there. All the Greeks, it's a lot. I get it. One of the great things about Chaikin Analytics is that it cuts down on all that and focuses you on what you need to know. What is your directional edge? What is your risk reward? And where should you be getting in and getting out? Where are the likely entry and exit points, right? And it cuts through a lot of that clutter. A lot of people don't take certain trades that they look at and they go, man, I think that's a good trade, but they don't take it because they have this stochastic and this relative strength and this volume profile, and they've got 8 moving averages going across their screens, and you can barely see the price charts. It's a lot of information at once to have to sort through. You don't need all of that. All right. Now, if you have a system that works for you with all that, that's great. For me, I use some very simple things. I have a checklist. I can go through it with ease. I can go through a lot of stocks really quick. Check, 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 check. Good. Take the trade. Check, check, check. X. No, move on. It's a simple, objective way to go about it. And so that's what we want you to get to, that point where you're not having to deal with all this information and trying to sort through it all. Marc built a system, I'll show it to you in a few minutes, that has exactly what you need on the screen. No more, no less. It's exactly what you need, all right? And time. Who wants to spend more time doing things, right? You want to spend less time. You want it to be quicker. You want it to be easier, right? So we'll show you how to do that. We show you how we can cut down on time. I used to spend so much time looking for ideas, looking for trades. So much, I can't, it's amazing. Now it's a screener away. I have even my screen saved. So a couple clicks, loads my screen, sorts everything, boom, in a list. I can go through my checklist. I do it in the morning routine on Monday morning. It's easy. We'll show you how to do it. And I got to tell you, money comes and goes, time only goes one direction, right? Nobody has more time in their day than I do. And I have no time more in my day than you do. We all have the same amount of time, right? Every one of us has the same amount of time that Warren Buffett has. Now, what he gets to do with his time is a little bit different than what I get to do with my time. I'm not running an international conglomerate, I get it, but we both have 24 hours in a day, not a second more or less. So let's make sure we're making good use of our time, because it is really, really valuable. And I think people lose sight of that. Maybe around the holidays a little less, we take the time, but you're going to get into the hustle and bustle of 2017. Don't get caught up spending tons of time on something that you don't need to spend a ton of time on. We can make it easy for you. How do we do that? Chaikin Analytics. Let me show you some things. The power gauge. Marc came up, I talked to Marc about this. I was curious about it. And Marc spent a lot of time thinking about and testing, importantly, listen to that, testing different factors for his power gauge, right? It originally was over 200 individual factors. There's a reason that there's 20 in the power gauge rating system. These are the 20 that Marc found were the most predictive of a stock's future movement. Right, and he put them in. There's an algorithm that's in there that shows you exactly what's likely to go up, exactly what's likely to go down, and it's based on a 1, 3, and 6 month time frame. These are the 20 individual factors in there. I'm not going to go over all of them. There's a bunch in there. We rate them individually, so you can search for just things that have good return on equity or good free cash flow. If you ever listen to one of Sandy's webinars, she talks about searching for things with good free cash flow and low short interest. It's a great screen. I have it saved on my platform myself, but this is where she's pulling that from. It's right in the power gauge rating. You can see all the individual factors. You can search by all of them. And together, they give you a really powerful directional edge. All right. It's 85% fundamental, 15% technicals, quantitative model. We have buy and sell signals in there as well. We'll talk about those also. But having a directional edge, and this is the life to date of the power gauge ratings. You can see the very bullish ones outperform tremendously. The bullish ones outperform. The neutral ones are pretty much on par, and you can see the bearish and very bearish. They've underperformed. Just the last year, 2015. And I'm excited to see what 2016's results were. 2015 was a tough year for the stock market. Look at if you had just avoided the very bearish and bearish stocks. What did I tell you about managing risk earlier? Avoiding landmines. You're down 17%. You know what you need to make that up? It's just tremendous, right? So just being able to avoid landmines, and for those of you that like put bearish strategies, think about the power in having a directional edge that last year came out under 17, over 17% down. Your average stock was down 7. That's tremendous. So if you're long only, it's a great way to avoid those landmines. If you're skating both directions in the market and you're using some option strategies or just outright shorting stocks, this is powerful. This is powerful, and it's back tested, right? So this is proven. And
Josh, I can give the folks an advanced look at the performance in 2016 because I've just been working on the numbers. The very bullish stocks in the Russell 3000 were up over 26%.
Holy cow.
2016, and the very bearish stocks were up only 6%. Obviously, we're finishing the year on a high note, and the market has responded very positively to the Donald Trump victory. But you mentioned earlier that it's hard to make up a big loss, which is absolutely true. So actually using Chaikin Analytics, if you endured that 17% drawdown with very bearish stocks, you could have made it up in 2016 by focusing on the very bullish stocks in Chaikin Analytics. So an interesting statistical quirk, and we'll be posting those numbers on our website early in January.
Oh, fantastic. I look forward to seeing that. That's impressive. So again, proven outperformance continually over the lifetime of it. It's rigorously tested. It's the only indicator I know of that looks forward. You look at a moving average, that's a backwards looking. You look at stochastic, those are backwards looking indicators. They take into account history and they don't really say to you where it's going to go. This tells you where it's likely to go. So yeah, if you had that 17% drawdown, you were a Chaikin subscriber in 2016, you were blessed to be able to make it up. If you were a Chaikin subscriber 2015 and 2016, hopefully you not only missed the 17 drawdown, but were able to compound that by being up to 26% this year. That's great. So we had some volatility. We expect the volatility to continue. A disciplined methodology. I pound on this drum a lot, just like the directional edge drum. I beat this one quite a bit. Having a set way to go about engaging in the market so it's unemotional, so you're not making a decision based on fear or greed, right? That's key to being consistent in the market. And this is how we do it. We start with the power gauge rating. We look at the industries. We go down and we look at the sell signals, and we use the technical indicators, the money flow and the relative strength. I'm going to show you some examples of how powerful those are when you put them together. It's amazing. It's so amazing that they have built, Marc has partnered, Chaikin Analytics has partnered with First Trust. I believe they're on their 5th, Marc, you can chime in and correct me if I'm wrong, but I believe they're on their 5th closed-ended fund with First Trust based on power gauge stocks that have been picked out based on their power gauge ranking. This is the 5th one they're doing. First Trust. That's a major institution. They would not be doing this and putting their clients into it if it were not great, not just good, great. And NASDAQ as well. We have some NASDAQ indices that we use the power gauge with that have also outperformed the NASDAQ by quite a bit. There's a small cap, a large cap, and a dividend one. All 3 of those have outperformed the NASDAQ benchmarks just by overlaying the power gauge rating on it. That's all right. Think of how easy that is. John Carter, some of you might know John. We're big fans of John Carter. John Carter's a big fan of us, just like First Trust and NASDAQ are. There's a reason for it. He calls it an objective awesome meter, which I like. I think it's very funny. Look at the smile on that guy. He's a funny guy, down-to-earth guy. He's fantastic. He's a great trader in his own right. He likes us. The reason he likes us is because we have an awesome meter. We have an awesome meter for stocks. And if you have an awesome meter for stocks, you know what you have? You have an awesome meter for options. because options are nothing more than bundles of stocks, coupons for stocks. So we thank John for that. So let's focus in here. We can start a top-down approach by looking at individual sectors and subsectors. We have them rated by their power bar. This is the number of bulls versus the number of bears in each sector or subsector. We get them nice and listed for you. Right now, you can see that the regional banks have a lot more bears. They have no bulls at the time I took this snapshot, actually. So you can see where the stronger sectors are. You can say, hey, these are the sectors I want to be in. These are the sectors that are outperforming the market. Think about the S&P 500. It's an average. What's an average? An average is something that has a few things below the average and a few things above the average. Well, do you want to be invested in the below average areas or the above average areas? Right? Exactly. So this keeps you in the things that are pulling the average along and not the ones that are weighing it down. You can get into the best sectors this way. And then you can go in and you can look at the individual stocks and do an analysis on that. Oh, I got a couple examples of these. We also have hot lists. Hot lists are our own curated lists that we give you. They're generated every night. So every morning you have them in the morning when you wake up to start your routine. You have hot lists. There are all kinds of hot lists in there. I happen to grab the turn bullish and turn bearish this week list. It gives you a quick way of finding if you have any stocks that recently changed, or if you have stocks that you were looking at for a change that have come up. This is a great place to find some early classic bulls and early classic bear stocks for getting into the trend early on. And then the signals. Pull up your stock list, go look at the signals and get a sense of, hey, is this a place where I want to get in and out? Does it meet my my risk tolerance? Does it meet my holding time? Those sort of things. And we can work with you here on that. We've got a fabulous client success team. I mentioned them earlier. Joe, Michelle, myself, the whole team. We're here ready to help you understand how to work with what you're doing and include Chaikin in it so it's nice and smooth and you get the most benefit out of it. It's a disciplined approach. So let's go over a couple of, you see a couple signals here. Those are these green arrows underneath the price bars. Oh, they showed me how to draw. Bear with me. All right. They shouldn't have taught me how to draw. I'm going to draw all over this now. Sorry, this is only my second webinar, so I'm still like a kid in a candy store with webinar tools. But you can see, look at the buy signals clearly given there. This happens all the time. I see these all the time. We talk to people all the time about them. Different signals for different things. These are overbought, oversold signals. They're generated based on a situation arising where you have bullish power gauge rating, good money flow, and an oversold condition, which is right here. All right, so we're oversold there, we're oversold here, we're oversold here. These are all oversold points, and every one of them would have been a good entry point, including this one, which didn't even get a signal. But if you're keeping an eye on it, good money flow, excellent entry point. This is the beauty of this. In one screen, I can go through step by step and say, what direction is this likely to go? Up, great. Now, where do I want to get in? Right along the long-term trend line, maybe along the lower band, wait till it's oversold. We can work through a good way for you to engage in the market and use Chaikin with this. I got a couple of these examples. We're going to go through them. Classic bulls, bullish power gauge rating, good relative performance, strong money flow. These are what we call classic bulls. I pulled up an example. This is from end of November, beginning of December. I picked out this example. I think it's a good classic bull one. You can see power gauge rating went green, relative strength went green. All down here, relative strength changed, power gauge rating changed, first oversold after that change, buy signal. Classic bull, let it run. Again, we call this the relative strength and the power gauge rating the dynamic duo. When you see these two things align, it's a really powerful indication of your likely direction. You had a bottoming trend line here. that's flattened and started to turn up, right? Clear indication of what is likely going to happen. It's likely to go higher as long as you still see that going up, these staying green, ride the wave. One of my mentors used to trade on the Florida Chicago Mercantile Exchange. That's his big saying. He says, ride the wave. When you get a wave like this, ride the wave. And we can help you identify these and then ride them. All right. Now, this is an options webinar. Think about all the times you could have sold a put into this or sold a call against your existing strategy. All right. Minus 1 day here, pretty much anytime you sold a put in an oversold area, you would have had a nice little bit of income coming in. Sell a put. Sell a put. All right. There's another one. Sell a put. All of those would have given you nice income on your cash going forward. I've got more examples of those, so stick with me. All right, let's look at our classic bears. This is what to avoid if you're a long positioned individual. If you are generally long the market, you don't short at all, these are the ones you want to avoid. If you do short, you like buying puts or maybe bearish put spreads, these are the ones that are really going to get you some great trades. Power gauge rating, bearish, relative performance weak, money flow weak, stock likely to go down. All right. Again, down here at the bottom, you'll see the power gauge rating and the relative strength, both red, and the stock, down it goes. Look at the amount of red you see in the money flow. Institutions are getting out of this. You had a couple of shots here to exit this position before taking a big loss, right? This is one of those, hey, we can keep you from those landmines. How do we do that? Well, look, relative strength changes, power gauge is red. If you were long this, that's the time to say, time to get out, right? Best opportunity when we get to oversold or overbought, sorry. We pop up against the trend line and it fails. That's a clear example of when you should start to get out. All right. If you have a position in this long term, maybe buy a put at that time. There are a couple different things you could have done, but you had a clear example, a clear indication of, hey, this is not going the way I expected. It's no longer a bullish stock. It's no longer outperforming the market. It's now an anchor on the market. Let's, you don't want anchors dropped when you're trying to chug along. So get rid of them.
Josh, let me make a point. If you go back to that slide,
sure.
You started the webinar by talking about a top-down approach, looking at sectors and industry groups, and this is a perfect example of a very, very well-known and large stock, Estee Lauder, in the soaps and cosmetics group, which is part of the consumer staples sector. This is a $28 billion market cap stock, even after dropping over 20% from its high back in April. So this illustrates a key point. The soaps and cosmetics group has 10 or 15 stocks like this: Unilever, Colgate, Procter & Gamble, with bearish power gauge ratings. They all fit neatly in a large cap sense into the consumer staples sector, which has been a drag on the market and does poorly in a rising interest rate environment, which is what we're in right now. So this stock is just a great example, not just of a classic bear, but of why we put so much emphasis on sectors and industry groups in that top-down approach. So what Chaikin does that's really unique is to give you the ability to do top-down analysis, sectors, industry groups that are strong and weak based on the power gauge, which is what the big institutions do, and then bottom-up stock picking. So obviously, if you're looking for a stock to buy, as Josh said, you don't want it to be Estee Lauder with this bearish configuration. You're looking for those classic bulls to buy. So I think this is a great example, a great choice, Josh.
Thank you. I I agree. And right up in the top right-hand corner, I highlighted it while Mark was talking about it. You can see we have it right there for you. The industry is a weak industry, and avoid stocks in weak industries. It's pretty straightforward. So thank you, Mark. That's a great point. Let's look at, I got a couple more examples I want to run through really quickly, and then we're going to talk about some very specific options examples that I have. But I do want to pound this home. I say it a lot. Power gauge rating, relative strength, we call them dynamic duo. They give you a great sense. Combine that with the money flow, combine that with the industry group, and you have just, I'm going to just run through a couple of these because I want to get to the options one specifically. But I do want to highlight a couple of these. I think it is important. You can see them right here. Strong industry, strong power gauge, strong relative strength, strong money flow, strong stock. All right. Let's look at a couple more of these. You're going to see the exact same characteristics. So I want you to keep your eyes on those areas I just highlighted, because it's going to look the same. And this is the beauty of this. Over and over and over again, a repetitive process. You know, I could almost sleep through it at this point. It's just that objective and disciplined the way we go through it. It's bullish power gauge, relative strength changes, money flow comes in, that industry is strong, there's your directional edge. And the odds of it are great. Combine that with understanding some good entry and exit points, and you're going to be off to the races. Again, bullish power gauge rating. It's all changed right over here, right? And look where the stock went from there. Up. Couple signals in here as well would have given you some nice entry points. There's a relative strength one here. There's another signal there. There's another signal here. Any one of those would have been a great entry point. If you're a longer term buy and hold person, then you can use these power gauge rating and the relative strength as a way to just keep an eye on the directionality. And as long as they look good, as long as they don't change personalities, keep holding and you're good to go. If you see them change, that's a flag. You want to look to manage your position. If you're a shorter term swing trader, the bands, these Chaikin bands, you'll see it bounced off the bottom band right there, right to the top band, from oversold to overbought. That takes 2 weeks, 2 to 3 weeks. That's a nice little swing trade. If you're into swing trading, excellent timing for you right there. Again, combine it with your options, right? When are you going to look for a bullish call spread? Well, in a stock like this, clear as day, that's the time right here, right? Anytime you see that scenario, again, in early November, right before earnings. And this isn't really an earnings thing. We've got some great earnings stuff for you as well. I don't want to get derailed on that. You're just gonna have to trust me on that. We've got some great earnings insights inside the power gauge that we can help you with your earnings plays if you like that as well. I got a bunch of these. I'm not gonna show them all. I want to get to the option stuff, but you'll see again, bullish power gauge rating, strong relative strength at the bottom, all the indicators line up. Those are your entry points. Here's a Bank of America one, would have gotten you in. I used this exact approach. I got into a steel stock before the election. It was fantastic. I know a lot of people that got into some of the bank stocks before the election based on what they were seeing on Chaikin. And it's now I'm getting calls that are asking me, hey, well, I've got all these profits. What do I do with them? I don't know, go on vacation, right? So they're fantastic. Again, and also, I'm going to harp on this because it's important. Avoid the landmines. This was somebody that wrote us in and said, hey, he was getting recommended Sun Edison. I don't know if any of you know what happened to Sun Edison. Not a pretty picture. We saw this decline coming way back when it was still a $30, $25, $30 stock. Think of all the pain you could have saved yourself by just avoiding those landmines. Here's a Solar City one. Again, bearish relative strength, bearish power gauge rating, terrible money flow. Anytime this thing had a pop, great short opportunity, great time to look at a put or a put spread. So That's it. This is a better night's sleep. A lot of this gives you confidence, and I sleep well every night because I know exactly where I'm at in my positions. I know what's going on. I know that I have a disciplined approach that yields results. I sleep well. So does Jim. This is something that he wrote into us, and I wish I had time to just show you all of the subscriber emails that we get. I could do a whole hour just going through subscriber emails that come into us. Now, I did a screen. I did a couple screens in preparation for today, and I wanted to come up with some options examples for you, right? So I did a screen. I came up with a couple results. Then after I went through the results, some of them were very good and I liked them. Some of them I thought, that's interesting. I wonder if I could find other stocks that are like this, maybe in a better situation. And so I used our new discovery tool and provided me some great examples. Marc is going to do a demo of it for you right now. Marc, you with me?
I'm with you and getting my screen up and running. So here we go. Discovery engine. Let me share with you why I had our development team and our product team put a big priority on getting this product built quickly. I did that because you reached out to us, our clients reached out to us and said that it was important to be able to generate quality ideas quickly. And what a lot of people like is the idea that they can take a stock that they've been successful with and then find stocks like that. Now, this is exactly what Spotify and Netflix are doing for music and for movies, and what Amazon does based on books that you've liked or appliances that you've bought. It's really a breakthrough in your ability to generate ideas that are similar to stocks that you are focused on, either on the long or the short side. And I want to give you a couple of examples. And the underlying principle here is that more is not better, better is better. When Josh showed you some of our hot lists, they're very useful, but some of them have 140 names in there. 72 stocks turned bearish this week, 147 turned bullish. That's information overload. It's there because some people want it and need it, but the discovery engine now short circuits the process. It means that you can find stocks that meet the criteria that you've used to find winning stocks, or you can take stocks that are being talked about on CNBC. So let's give you an example of that. Josh showed you an example of a regional bank stock, IBTX, which has had a very big move. All the banks have done extremely well since the election because interest rates are moving up. So what I did here was to seed the discovery engine with IBTX, the stock that Josh used. And let's go back and see what that chart looks like. He showed you the chart as of the end of November when the stock was 60. It actually got all the way to 65. And it's now got very strong money flow, power gauge, relative strength, all the conditions for a classic bull, and it's gotten oversold. So using the discovery engine, I seeded it with IBTX, and I got 5 stocks that had similar characteristics. They're in the banks and thrifts group. And by the way, that has over 400 stocks in it. So it's a very large group. It's very hard to zero in on a good stock to add to your portfolio. It's a small cap value stock, strong free cash flow, and the price is oversold. So what did the discovery engine do? Well, it found similar stocks. Here's Hilltop Industries in the banks and thrifts. It's a value stock, strong financials. And then there are 5 more names up to a total of 20. But the key here is, just like Spotify and Netflix rank stocks based on their relevance to you, these stocks are ranked in order of relevance so that the first stock is the most similar to IBTX. Now, I'm going to show you an example on the short side. Amazon is a stock where the power gauge rating has gone bearish. It happened to be down almost 1% today. And you might own it, or you might be short Amazon, or looking to short other stocks like Amazon. So by seeding the discovery engine with Amazon, I got 5 ideas immediately. Alibaba, well, what could be more similar to Amazon, the largest e-commerce retailer in the United States, than Alibaba, the largest e-commerce retailer in China, which also has a very bearish rating. Notice that all 5 of the stocks that came up in the relevance-based discovery engine have bearish power gauge ratings, and they're all involved with the internet, e-commerce, Expedia, travel, TripAdvisor, travel, Mercado Libre, I believe that's a Latin American-based e-commerce site, and then Liberty Ventures, which invests in a lot of sites. So there's a wonderful example of how, if you've zeroed in on Amazon as having turned weak, let me show you what the Amazon chart looks like. Power gauge had been bullish, and then suddenly it turned bearish as analysts started lowering their estimates, and it started to underperform the market. It gave a relative strength sell signal the other day. So now it's logical that if Amazon, the leader in the group, which had been making new highs up until about 2 months ago, has rolled over, you might want to look for other candidates in the group. But let's say you owned Amazon and you now want to switch it into something else that's in the retail sector. Right under the stocks that are similar to Amazon with bearish ratings are stocks with bullish ratings that are potential swaps out of Amazon. And in this case, I'm immediately attracted to Best Buy. Why? Because Best Buy is one of the big box retailers that's selling TVs and computers, and supposedly Amazon was going to put them out of business, but guess what? They're thriving. And the discovery engine immediately saw Best Buy as a potential swap out of Amazon. Now, one last example I'm going to give you is a neutral stock. We looked at a very bullish stock and a very bearish stock, and that's Johnson & Johnson. Now, Johnson & Johnson is in the drug group, one of the largest drug companies in the world. It's got a neutral plus rating, which means that it's got bullish fundamentals, but it's in a downtrend, happens to pay a big dividend. And look at the stocks that the discovery engine found as potential replacements for Johnson & Johnson with a neutral rating. Bristol Myers Squibb, excellent example. Some other stocks in the drug group. So if you are in Johnson & Johnson with a neutral rating looking to switch out of it, the discovery engine is suggesting Bristol Myers Squibb as a possible replacement. Now, if you scroll down, there are 7 different slices on here. One of them is high dividend payers. Josh mentioned the desire to create more income using options. So the assumption the discovery engine is making is if you're in Johnson & Johnson or interested in it, one of the reasons might be because it pays a large dividend. So here are other stocks that pay relatively large dividends. And if you look at them, they're all large cap stocks. So they're similar to Johnson & Johnson. They're large cap growth stocks, Bristol Myers being the primary one. So I think you can start seeing what this discovery engine can do for you. It can help you find stock ideas quickly and easily that match up with other stocks that you're interested in, have made profits in, or are looking to short. And I believe it's the most important piece of software I've ever been involved with. The power gauge rating is fantastic. Obviously, the power gauge rating is the primary point of relevance. It starts with the power gauge rating. If you got a bearish stock, we're going to show you other bearish stocks that you might want to go short. Chaikin money flow, created 35 years ago. Very proud of that. This discovery engine is the single best piece of financial software. And the reason is it puts you in control. It gives you the ability to quickly and easily find a few stocks that are custom tailored to the way you're thinking and wanting to act in the market. And remember, more is not better, better is better. This is an example of better, being better. This is, I think, the best idea generation capability that I've ever seen, and very proud to be offering as part of Chaikin Analytics. So with that, Josh, I'm going to turn it back to you.
Thank you, Mark. It is a fabulous, absolutely amazing tool. I used it to come up with some of the options examples that I'm going to run through quickly here. I don't want to take up too much more of our time, but I do want to spend another maybe 15, 20 minutes or so going through these options examples, talking a little bit about Chaikin, and then we'll wrap it up for the day. But it's a fabulous tool. It's helped me find some great ideas already. I think that there's something in there for everybody that can get on there and use it. If you're looking for replacements, like Mark said, for swaps, it's a great place for that. If you're looking for pairs trades, for those of you that may not be aware of what a pairs trade is, it's where you go long one stock and short a different stock, a similar stock. Mark showed you a great example of how that can be used by finding similar stocks like this that are bearish when you have a bullish one. So you can do a call on one and a put on the other, or long one, short the other. It's fantastic for pairs trades. If you're not doing pairs trades now, listen, don't just jump into that. We can help coach you through that. That's why we have the wonderful team here. But it's a great way to start to get into some of these strategies that can help you make money. Down at the bottom, the high dividend yielders, it's fantastic. I put in a stock I owned with a high yield that I own because it has a high yield, and I like it for that reason. I can sell calls against it. I can sell puts to get in at a discount. I put it right into the discovery tool, and I'm looking to position a couple of others now for the next year, just based on what came up in the discovery tool for a stock like the one I put in that I have in my long-term portfolio. So let me show you what I got here for the ideas that I came up with. So options play, real quick. Options play. It's a fantastic tool. It's built right into the platform. It gives you a couple of examples, auto-generated strategies right away. Tells you your risk and reward. Gives it a score. You can see on the left side there. It tells you what the options market is pricing in. If you're just buying 100 shares, or there's an on-bearish strategy where you can short it. It gives you a simple directional call in the middle, and on the right it gives you the vertical. I pulled up a couple of verticals. It gives you different panels that you can look through, profit and loss simulators, so you can get an idea of how much you're likely to make if it goes to a certain price by a certain time. It also tells you what the range is likely to be, a trading range simulator. So you can see what a 1 standard deviation move or a 2 standard deviation move based on the individual expiration that you're looking at, right? Because a move over 46 days, like we see here, is going to be different than one if you went out 90 days or you went only 30 days out. The options will price in different moves for that. So you can easily, quickly see that here. It saves a lot of time. There's also a modify. I'm not going to get in too much into that, but you can then, as I said earlier, you can tinker. You could say, well, maybe the September call vertical on this one, it's past September, maybe it gives you a February one and you want to do the March. Maybe it gives you February one, you want to look at the January. You can do that. And then it updates all this information for you in a click of the mouse, and all of a sudden you have your risk, your reward, your odds of success, all of it real quick. It's powerful. It really helps me. I learned how to do options from some really, really impressive folks. Some really impressive guys out of Chicago. A guy, actually, he's from Philadelphia, is one of my mentors. He's a professional. He earns his entire living from trading options. His name's Steve. He's amazing. He's got a great way of explaining it to him. I owe him a lot for my knowledge. I took a look at this options play integration, and the options play guys, Tony over at Options Play, Tony Zhang, they've done an amazing job at putting together a tool that can help somebody with my level of knowledge in the options market. Not only that, it can help somebody who's just starting out in the options market, and it's just so ability to do both of those things is not something you find in a tool that often. So a lot of credit to the options play folks for that. So first, let's look at what we look at for a January decline. I mentioned that earlier. If you wanted to hedge January decline, we just pulled up the options play. Here's a couple of things that they gave us on the Qs, which is technology. You can see there's the options play scores there. That's a pretty darn good score it has there. Over 100 gets a green rating, 80 to 99 gets a yellow neutral one. You saw on the last page there are a couple of red ones. Those you want to avoid. But right here, and I'm going to highlight a couple of these things just to point them out for you. You have the rating, what my expected return is going to be. This is a February put vertical that we're looking at. It tells you exactly what it'll cost you. So $230+ to hedge over $700 of movement. That's a good risk to reward. That's 3 to 1. That's very good. Same thing over here on this side on the Qs. Again, you want to hedge $174, almost a 3 to 1 return here, 270% return to hedge for January. It gets you all the way through to the middle of February. You know that if it drops that far in February, that'll keep you up until February hedged. If you see that drop happen in January, you can get out early. A lot of people don't understand how to manage these trades. We can talk you through them as well. We can help you with that. Lean on us. We have the expertise. Marc is an options expert himself, so we have the knowledge in-house on how to help talk you through what you should be doing given what you're trying to achieve. So if you're trying to hedge a January decline, these were examples. 2 clicks to the mouse. I looked up the SPY. I pulled up the options play. Great idea right there. Plugged in QQQ. Hit enter on my keyboard. Clicked on the options play button. Up came this window. I just took screenshots of them for you. Actually, the graphics team did it because they're amazing and they don't really like me playing with graphics. So anyway, they did a great job pulling it up. And these are perfect examples of how to hedge a decline in January. So people that want to capture profits and lock in some gains early in the year, if you're an institution and you want to lock in some of the election gains that you've had and you want them to go on 2017's books and you're going to unload them in January, if you see a lot of institutions do that, you're going to want to be hedged in this way. So this is a great way to get hedged, and it took me just a couple of clicks of the mouse to find a great idea on that. Let's look at some of the income strategies that I mentioned earlier. So suppose you just had some cash lying around and you're not earning anything at the bank, right? Great way to do that is through puts, cash secured puts. I pulled this one up on General Dynamics. It's in aerospace, defense. It's in a strong industry. Look at what we looked at before. All the same characteristics that I wanted to see. Bullish power gauge rating, just turned neutral, but we still have great relative strength. We're oversold on the bottom. I walk you through this bottom up, right? Oversold, bullish money flow. We're kind of flatlining on the stock. You could sell a put. This one I pulled up would have gotten you $380. That amounts to, look at this, folks, an annualized return. If you could do this every month, it's going to give you a raw return of 2% in 24 days. Where else are you going to earn 2% in 24 days? I think the 10-year earns 2% in 10 years, right? So maybe that's a little bit better now, but you get what I'm saying. Is this making sense to everybody, what I'm showing you, the way that I'm going through this? I've been going through it a lot. I haven't really stopped to breathe yet. It's a lot of information that I've been trying to get to people. But can you see how you could use this yourself? See how you could look at a chart, pull it up, see the power gauge rating, see the relative strength, see whether it's oversold, see the money flow, check the industry, pull up options play, and there it is. It really, this takes me 5 seconds to look at. You see I have a little watch list that I've curated for the past week that I've been looking at. It makes it nice and simple. I looked at another one. This is for January 20th, 175 strike. I also looked at one that was a 170 strike. It had a 17% annualized return. That's a fabulous return also. So if you were wanting to be a little more conservative, you could have gone with that one. That's a great, both of those would have been great examples. All right, now,
Josh, let me
yeah,
point out for people who are not familiar with cash covered puts that writing a put option obligates you to buy the stock. It enables you to buy the stock under the market. So if it's a stock that you are wanting to buy anyway, this is the ideal strategy. If the stock stays flat or goes up, you pocket the premium. As Josh pointed out, in this case, 33% return for an at-the-money put writing strategy, or 17% for an out-of-the-money put writing strategy. If you wrote the 170 put, you would have basically been able to buy the stock at 168 or earn about a 1%, 1.2% return, which annualizes out at about 17%. So there is some risk in writing naked puts, cash covered puts. So you should only do them on stocks that you want to own ultimately. A lot of people will buy, if they're planning to buy 200 shares of stock, they'll buy 100 shares and then they'll write a put on an additional 100. So they're bringing in that extra income. If the stock goes down, they buy that second 100 shares under the market, or if the stock goes up, happily seeing the profit on the original 100 shares and pocketing that premium in 24 days on the cash covered put right.
that's a great point, Mark. Yeah, this is really a strategy for if you're willing to own the shares itself. But it's like you want to go to the store and, I don't know, buy, let's get ready for the summer. I'm ready for the beach time. Ready? You want to buy a new beach umbrella? This is a way to buy said umbrella at a discount. It's like having a coupon to buy it on sale, right? Who doesn't like a good sale? So there's a way to buy General Dynamics at a discount on sale, get it at a lower price, and if it goes up, then you at least get a good return on your cash, which is sitting there anyway. For some of the more advanced options traders, you could do what would be a bullish put spread. So if you didn't want to own the shares yourself and you wanted to manage your risk on the downside, you can construct that here as well. We can walk you through how to do that on options play. You just add a leg. It goes right underneath. Right underneath here would be the other leg would be added in, and then it would just update everything up here for you so that you see the new returns and all the new data for you. So that's true. Now, this is a strategy. The market really goes one of three directions, right? It goes up, it goes down, it can go sideways. So this is a strategy where you profit on 2 out of 3 of those general market moves. And you're going to be doing that in a scenario where you have the edge, the directional edge on which one of those 3 it's likely to do already. So you combine all that, it's a pretty great way to get into stocks cheaper, and or generate a return on them. I've got another quick one. I did a Morgan Stanley one. This is one that I found using the discovery tool. I was looking at some of the financial stuff. I said, I wonder what else is in the financial sector that would be a good example to use, something that I might even want to get into myself. Here's one on Morgan Stanley. Again, if you're willing to own Morgan Stanley, then this is a way to get in at a discount. You'll see annualized return of over 24%, a raw return of 1.6%. You can see that here. Again, you have very bullish situation going on here. Money flow is positive, relative strength positive, power gauge is positive. We are oversold. We've been coming down a little bit, so we're not quite outside of the Chaikin bands anymore. It looks like we're consolidating a little bit. So if you want to get in on a bit of a drop, on a dip into a strong industry, this would be a great way to do that. And if it doesn't drop down and it just takes off, well, then you're able to just keep the return. And who wouldn't want 1.6% return in 24 days? That's a great return. So those are just 2 examples. There were plenty of them that I had on my screen, but we don't have time for all of them. Let me show you. Here's another one, and this is again a good swap opportunity too. So here's a Citigroup play. This was a covered call that I looked at. Here's a covered call where you could generate about 12% in the year, an extra 1% as the stock's going sideways. Here you have a situation where you have, again, bullish power gauge rating, positive relative strength, great money flow, great industry. Where are we? We're kind of up along the edge of the bands up here, and we are overbought. Overbought, great opportunity to sell a call outside of the money, out of the money call, where you can take in a good return and hopefully keep your shares, right? And if not, well, you've got that put that you put on in Morgan Stanley, and this is a good swap, right? Like that. Does that make sense to everybody? This is a great way to generate income off of shares you already own, or to generate a return on cash that's sitting on the sideline. And it's a good way to use it to get in and out of positions. I just did a covered call on a steel stock that I had owned before the election. It had run up quite a bit. My discipline told me it was time to take some profits. So instead of just selling the stock outright, I sold calls. And as it went up, I get my thing called away from me. As it pulls back, I keep the premium, and then I can sell another call. Great strategy to, one, lower your cost basis, generate some income, and get you out of stocks that have already run up. Remember, it's not your money till it's your money. All right. I haven't been able to walk into any Wawa, sorry, we have Wawas around there, any 7-Eleven and offer them my Citigroup stock to pay for my Slurpee. Doesn't work, right? You got to have the cash. So for those of you that want to generate an income, great way to do that. For those of you that are short-term trading, this is a great way to get in and out over a couple of months and squeeze a little more out of it. You'll be amazed how much 1% here, 1% there adds up at the end of the year. All right, it adds up quicker than you think. So those are three good income strategies right off the bat. I want to show you some directional plays as well. I pulled up a couple. Again, I did a screen. I went through the discovery tool. I found a couple of good verticals. Here's Akamai. All right, Akamai is, oh, this is another income one. We're gonna go to my verticals. Oh, wow. So just real quick, before I go to the verticals, because I do want to point this out, it tells me the odds that this is going to expire are worthless. POW sounds percent, that probability of expiring worthless. So I've got more than a 4 out of 5 shot that this is going to expire worthless, and I'm going to keep a return of about a little more than 0.5%, almost 10% a year on this stock, holding on to my shares. So if I wanted to be long this stock and generate a little bit extra out of it, squeeze a little more out of every month, I could have done that. So you saw the trend change here. You see the relative strength change. The power gauge changed right here from long time yellow to green. We have money flow starting to come into it. Stock pops, right? All that lines up. What do? It all tells me my directional edge is going higher. I want to time this a little bit better. Oversold, overbought, outside of the bands. Overbought, not quite at the bands, but you get the picture. This one up close to the bands, also overbought. Great opportunities to squeeze out a little extra income. Pro tip, by the way, there's a pro tip. You sell a put, you can buy it back. Most people wait till it expires worthless. All right, this is a bonus pro tip for you. If you've hung out with me for the last hour and 15 minutes, buy it back. Buy it back for 10% of whatever the premium was, and then you don't have to worry about owning it. Right? A lot of times, a lot of the guys that sell puts, a lot of the people I talk to that sell puts, they sell a put, it gets a pop, they feel great about it. They say, I got 10 days left, it's worth a nickel. Let me just let it expire worthless. Give the nickel back to the market maker, keep the profit you made, and move on. All right, that's a quick little pro tip for you, a bonus here toward the end of our session. Let's do one or two more real quick, and then we'll go from there. I want to show you some of the verticals that I came up with. Here's a Capital One vertical. Again, you'll see everything lines up exactly what I've been talking about all day. We have the directional edge right here, bullish power gauge, bullish relative strength, great money flow, oversold, on a dip, strong industry, all lines up, pull-up options play. It gives me a February vertical, got a great risk reward, right? I have almost a 2-to-1 in this. I got 200% chance for profits here on a 1 standard deviation move, a 108 rating. That's a great setup right there. And the other ones look just the same. It's just over and over again. I do the same thing. Here's one GM. Again, strong industry, top right, strong industry. We're on a pullback. We are oversold. We have great relative strength, great power gauge rating, great money flow. It's all right here for you. You see this list on the left? I went through this whole list in probably 5 minutes. I looked at everything, pulled up options play real quick. I know exactly what I'm doing. We can just hand you the template. If you don't have a directional edge in the market yet, and if you don't have a way, an objective way to understand when to get in and when to get out, you need Chaikin analytics. You need something like this. All right. The options play just makes it all that much easier to find great option strategies. So let's move on. Last one, Wells Fargo, another one in the banking sector, same setup. Again, great options play score. This one has a 200% probability chance of return there. Chance to make 200%. Sorry, getting to the end of the day here. And risking 165 bucks to make over 330. That's a 2-to-1. You don't have to be right all that often to make money in a strategy like this. You're right once, you're wrong once. You bat 50% and you come out, 100% ahead every 2 trades. That's pretty good. All right. So this is what you can expect with Chaikin Analytics. We have a great team here who will help you work through this. Understanding how to find the bulls and the bears using the power gauge rating, matching it up with the relative strength and the money flow gives you your directional edge. We can find all these things by the screener, quick screen. And I had all these stock ideas at the tip of a finger, run a couple through my discovery tool. It's mine now. Marc gave it to me. And it's available to all you as well. It could be your discovery tool. So if you think that would help you, I certainly know it's helped me. You should call in. The number's at the bottom there. Talk to one of my colleagues. They'll walk you through the process. We do onboardings all week. So you can get up and running, start the new year off right? Get the screener, understand how to do the top-down sector approach, understand how to do your timing better, all of that all in one place. All right, this is an email that my colleague Joe got. So I guess Joe is joking with him because he started off with funny. Joe's a funny guy, so it makes sense that his email would start with funny. But look at that, his first put option made money off of. Right? He was nervous. Why was he nervous? Didn't have the confidence yet. He has the confidence now. He's been using Chaikin for a little while now, so he's a lot more confident now. But that's it. You pull the trigger when you have confidence. Here's another one from Torsten. This is using an AMD call and a Google put spread. Right? And John Mindlin, big fan of ours. Just like John Carter's a big fan of ours. This doesn't shock me. Now, John Mindlin didn't come up with a fun, awesome meter phrase. I'm going to have to ask him for a good little catchphrase like that because I like John Carter's awesome meter. But, I mean, this is a professional trader. He knows what he's doing. He's got a long time in the market and he likes our system. He uses it. He integrates it in what he's doing because it helps him. This is a pro. I've been trained by pros. I took one look at Marc's power gauge rating, the way that the workspace looks. Immediately, I knew if you are in the market and have been and have the experience that some of these pros have, I don't know how you can't look at this and see the immense value that it has. Having a directional edge is paramount. This gives it to you, helps you with some of the timing as well. Stock screener, options play, earning alerts. We have intraday charts available to you so you can keep an eye on what's going on intraday. We're not for day trading. That's not what we do. So if you're looking for day trading, other places, but if you're doing shorter term trading, couple weeks, couple months, or long-term investing, this is a powerful, powerful platform. We are offering it to you for $17.50. All right, that's great, $200 off. This is it's like an option on Chaikin, right? You can get it cheaper. Your own put option on Chaikin. So there you go. You can sign up. You can go to the website, chaikinanalytics.com/options, or give us a call. The number is at the bottom, 877-697-6783. Talk to my colleagues. We can get you on an onboarding session tomorrow or Tuesday when we get back to the office. I can have you on a one-on-one with me talking about your option strategy specific to you within a week. So if that's how you want to start off the new year, join me. Come hang out with me on the phone. We'll have a great time talking options. I love talking options. Options give you options. We have small group and one-on-one tutorials set up. We've got options education stuff that we can provide for you. We have a market insight weekly newsletter that you get. Marc spends his time putting together a weekly newsletter. Words of wisdom from Marc every week. That's worth it right there. Right? I don't think people grasp the value of being able to get insights from somebody like Marc. The best way to see farther than a giant is to stand on the shoulder of a giant. So all I do is I hop right on Marc's shoulders and I go, wow, it's a great view from here. You can do that too. Right? We also, John Schlitz put out his morning insights every single morning. Great place to get quick and easy stock ideas. I'm going to promote Joe and Michelle and myself one more time as the client success team here. We are fantastic. You should come talk to us. We'll get you set up. We'll get you up and running real fast. The system is not hard to learn. It's been designed by Marc specifically, so it's not hard to learn. It's easy to integrate into it. Here's Eric M., who sent us, I got so many of these. You get the idea. It's amazing. All right, so $1,500 if you do it by midnight tonight. $1,500. I got to tell you, this is the lowest price I've ever seen, and I think it's the lowest price you will ever see. You may never see this price again. So if you've been thinking about this and give yourself a Christmas gift or a Hanukkah gift or a Happy Holidays gift to yourself, to your portfolio, $1,500. This must be like an end of the year steal for $1,500. So call us 877-697-6783 or hop online, chaikinanalytics.com/options. We can get you onboarded within a day or within the week. We can have you set up on one-on-ones, talking options, getting this integrated into what you're doing. That's really all I've got. I hope that you've enjoyed your time with me today. I've really enjoyed my time. I kept it to 77 minutes, so I ran 2 minutes longer than I promised Marc. But I don't know. I think it was pretty good. I think I've had fun. I hope you have too, and I thank you for being with me.
Awesome, Josh. Well, excellent job. It's Josh mentioned this is just his second webinar, and I completely forgot that early on because I really do think he's a natural presenter and he's fantastic when it comes to analyzing the market. I can tell you for sure that I've learned a ton about him. In the meantime, I want you to learn just as much from him as I have throughout the time that I've been working with Josh. And the best way for you to do that is to take advantage of the offer that he's made here. $1,500, a one-time payment for a complete year to Chaikin Analytics. The Chaikin Analytics platform, the discovery engine that Marc demonstrated so well, and a variety of other features and products, as well as, of course, our options play functionality. You've seen that I've chatted out the link. The easiest way for you to join us, chaikinanalytics.com/options. You can access this in your chat window. You can click on the hyperlink. You can type it into the web browser yourself. You'll be led to a page that looks just like this with a quick little order information, as well as the discount code automatically applied. But again, that's just if you go to chaikinanalytics.com/options. Our whole crew is still standing by. You can give us a call at 877-697-6783. I saw a number of stock requests. A lot of people are interested in what's the rating for this stock? What's the rating for that stock? Give us a call. Again, we'll be more than happy to do a quick little demonstration with you about the program, show it to you, make sure you test drive it before you really take it for a spin on your own. Last thing, Josh mentioned we host onboard sessions every day throughout the week. There's one more day this week, obviously. Tomorrow's Friday. It's our last onboard session of the year of 2016, and it's the last one until next week. So you're going to have to wait a while until next week before you can be on one of our onboard sessions. So to sweeten the pot a little bit further, again, take advantage of Josh's offer here, $1,500 for complete year to Chaikin. You'll have access to the program within just a few minutes after subscribing. And then, of course, you'll be able to attend our onboard session tomorrow afternoon. Again, if you're not sure how to register, call us 877-697-6783. And again, we'll get you registered. We'll get you set up for tomorrow's onboard session. And it's a great way to just really get off on the right foot, especially leading into the new year. So we're going to leave it there. Everybody, thanks so much for your time. Have a wonderful afternoon. Have a very happy new year. And we will see you on tomorrow's onboard session.